Hello everyone, this is Carlos from ForexFX.com coming back live to you at October 18, 2009. This is going to be a great week. We're getting close to the launch of Forex services, but forget about the launch right now. Let me give you some freebie information and technicality so you can start learning how to forecast the market. Let's get right into it. This is going to be a two-part video based on the length of it, so you're going to learn along with it, all right? And please give me your feedbacks. And what do you think about sending your requests and information on omegabus@gmail.com? So let's get right into it. Okay, this is a weekly chart. As you can see, I just want to show you a couple of things. I'm going to be analyzing the market for the next week, which is a very possible bullish scenario. I'm expecting the market to retrace a little bit so I can go long the market, and we're going to be expecting between 200 and 300 pips to the upside, and that's obviously what we expect to do the market to do. Now let me show you a couple of things. I need to show you what an outside bearish bar and outside bullish bar means, and that's very simple to do. I have here a weekly chart, and I'm going to show you this. Each bar is a week of market movement. Now an outside bearish bar is exactly a bar that closes higher than the previous bar and lower than the previous bar. As you can see, this is a bigger bar than the previous one, and it closed down, meaning we can go short on a retracement or go short at the opening of the market. Either way, in this case, I'm going to show you that the market, if retrace, let's say you took halfway through all the way to the downside, 685 pips or so. Let me try to find another one for you. Here's another one. You can see this bar is closed higher than the previous, lower than the previous. It has a down close. If we sell by the next bar to the downside for the next 2 weeks, we had a chance of profiting almost 400 pips all the way through. And in this car, actually over here, you got a bullish outside bar. This high is bigger than the previous, this low is lower than the previous, but it's a high close, meaning that you can buy on the opening or on retracement. In this case, we would have probably lost money on a retracement, but eventually the market went up, as you've seen. And let's say that we went short on the retracement, we probably would have been stopped out. On the breakout, we could have go long, and it gave about, wow, it's 772 pips. So anyway, so on and so forth. There's another one. You see, this is a bullish outside bar, higher than the previous high, lower than the previous low, possible move to the upside, and in this case it didn't work out. But this is basically the momentum base that I see on the weekly basis. You know, we don't trade on the weekly. So anyways, all I wanted to show you is this the possibility of this, because look what the market did this last week. Is an outside bullish bar, very bullish bar, higher than the previous, lower than the previous. This is a outside bullish bar, meaning that we can go long the market anywhere and on any situation. All right, so let's say that we're expecting a probable retracement, let's say 50% out of the whole move of this bar over there. So we would probably be looking to go long the market around 60, 70 or 60, 60 something. So that's a basic idea of what we're looking for in this market. All right, so let's just move into lower time frames. Okay, so here we are on the 1 hour chart, and the question is, where are we today in terms of analyzing the possibility of the market? If you might notice, I place a sell right now, and this is based on an expectancy of the market to retrace to my area. And Carlos, why did you go short? And that's a great question, and on the next video I'm going to explain to you exactly the terms of why I went short. And sorry about that. So tune in for the next video. I'm going to explain to you exactly the reason I went short and the reason I'm going long, and I expect to go long within today and tomorrow. All right, so see you in the next one.